Hello everyone, I'm Gwen Preston of Resource Maven. I'm here at the Metals Investor Forum in Vancouver in September, and I am joined today by Shane Williams of West Red Lake Gold Mines. 5 words in the name of that company. It feels like it's a long one.
It is a long one.
Thanks for being here. You just took us through the West Red Lake story on stage here. Let's set that stage briefly again for those who are just watching this video. West Red Lake bought the Madsen mine. Tell us, so Madsen is a mine that was built. Everyone was very excited. It failed quite spectacularly. Now your team has come in and purchased the asset. Tell us why.
So yeah, a lot of our team, our technical team, have a lot of experience in building and operating mines, early stage. And we wanted to get a mine that we could quickly get into production. As you're well aware in the industry, it takes a long time to put a mine into production today.
Yes.
It can take anywhere from 10 to 15 years by the time you do the resource drilling. You define a resource, you do your engineering, you permit it, you deal with your First Nations partners, you get consent, you get your engineering, you get your construction, and you also have construction risk, overruns, and schedule delays. So all that together, we also see the gold market moving very quickly over the next number of years. And so to combine a quick production into production and also leverage the gold price, that's really why we focused on this. Because it's a ready-to-go mine. It's like buying a new car, basically, ready to go. Yeah.
It's like buying a new car that the previous owner sort of forgot to do the oil changes. That's a bit of a simplistic analogy, but that's kind of what went wrong with Madsen, right? There were decisions that were made that are fixable, that could make this thing work.
Yeah, that's what we saw very clearly as soon as we went in and did our due diligence. The previous operator versus, it's kind of, as I said in my talk, it's the most hated asset in Canada at one stage because a lot of people lost a lot of money on it. But we saw very clearly that there's a difference between the asset itself and the management. And that gave us the real focus on, if we bring in the right team, we do it right, we can turn this around. So that's kind of why we attacked this asset and brought in a strong technical team. And many of our board members came in, they also did their own due diligence. They looked at the asset, obviously, given the history, they want to make sure they're at the right asset. They have a good understanding of the issues before they step onto the board. So that's another tick on the project.
Absolutely. Okay, so we could talk a long time about what those decisions were that made Madsen not work. That conversation exists. Yeah. Instead of that, let's talk about what's happening from here forward. So, West Red Lake Gold Mines has a year to 15 months of sort of hard work ahead that will culminate in a pre-feasibility study, which is something that usually happens years before a mine gets into production. So in that classic Lassonde curve, a pre-feasibility is like in the sort of early stages of the depths of boredom for share price action. But that's going to be turned on its head in the case of West Red Lake.
Yeah, we're kind of building a mine backwards, Gwen, a little bit.
Because it's already built.
It's already built, and now we're doing the studies to catch up on that. We're doing the definition drilling, we're doing the detail, we're doing the study. But by the time we have that study done and the work done, we will actually be ready for production. We'll have no capital to spend because it's all sunk costs. We'll have all the teams in place because we're starting to develop. So it's really just a final tick, really, to get back into production. Tailings are in place, permits are in place, so it's really, you're buying a package ready to go.
Absolutely. And there's some cost needed, some spend needed, and that will happen sort of over 2024, right? There's certain infrastructure needs that you need to expand on, work on the underground drilling, things like that. So if you're an investor, you can expect another capital raise to fund a chunk of work in 2024, but then once you decide to go officially, there will be no more need to spend money, essentially.
Yeah, look, a lot of mines, as they've developed out over the years, 10 to 15 years, there's a lot of capital to be raised to move them forward, a lot of dilution for the shareholders, a lot of capital to be moved forward as they develop the project. We're in a unique situation in that we have the project, so we've no big outlays of capital, we've no big dilution for shareholders, so potentially one more capital raise, and we're in production effectively, which is unheard of in the industry. To go that far, over years and years of drilling, dilution, etc. So that's the unique position we're in, I think, for investors. They get in, they don't get a lot of dilution, and suddenly we're producing.
And let's talk about producing and valuation and share price. So you're at about 100 million today. You will need to do another capital raise, so there'll be some dilution in the next little while. But then you're going to, I mean, we're assuming by the end of 2024, get to a decision to go on an asset that will produce 70,000 ounces of gold a year, maybe more, in that sort of ballpark. Let's talk about what kind of valuation proxies there are for that.
So one we use quite a lot is Wesdome Mining. It's a good analog to our project. It has today probably a little bit higher, maybe 100,000 ounce a year, 100 to 125,000 ounce a year producer in a good region of Canada. It's in the Abitibi region, which is similar to the Red Lake region. It today is trading at about $1 billion market cap. So that'll give you the sort of scale of where we are today, potentially down the road how we get into production. And again, you have that shorter timeline. So you're investing today, we have a 2-year, potentially year, 2 years into production, full production. That gives the runway. And if gold price is rising in the same environment, you get a lot of leverage to gold price.
And that's why Frank Juster is excited about this opportunity.
That's why Frank is putting a lot of effort into this opportunity. I mean, I've never seen Frank as engaged. We were down at Beaver Creek, we were down at Denver Gold, and he was promoting West Red Lake. He was down there with us. He's really engaged in it.
I mean, what we just arm waved about is the potential for a tenfold in value, from 100,000 or 100 million to $1 billion, using that Wesdome analog, no guarantees here of any sort, but that's the kind of appreciation in that condensed time frame.
And that's just, remember, that's just for that asset in reality. So the potential is to go much bigger. Most of Frank's companies or the companies we've involved in have gone a lot bigger. So there is a consolidation strategy, as I talked about the hub and spoke model. So there is an opportunity to go much bigger. And so we have really a good platform to grow over the next number of years. So it's going to be exciting.
You have a lot of work to do in the next 15 months. So I look forward to keeping up with it and watching how things grow.
Excellent.
Thank you so much.
Thank you very much.